Hello, my name is Steve Bigelow with the Candlestick Forum, putting up a little special blurb on finding our big power trades, and we've identified a couple this coming week, but we're getting a lot of feedback on how we're finding the number of big trades that we have, and it's just one simple analysis. It's just identifying where the strength is coming into the charts based upon human emotions. So obviously human emotions are what set up patterns and pattern breakouts. And pattern breakouts give you good returns, but pattern breakouts with strong confirmation is what creates these big power trades. And that's very simple. People have been asking, well, how did you identify buying down here and eventually selling out here? We eventually bought some more here. And it was nothing more than analyzing when there's been a major change of investor sentiment. This is not rocket science. This is telling us that when things are trading flat and all of a sudden we see new interest, we can go back and research what that new interest is. And we took profits on the basis of normal human reactions, which is identified by the fact that when you're starting to move too far away from the T line, take some profits, you can always buy back. This is not an unusual situation. Our people in the chat rooms have taken advantage of CCIV because when it broke out, one very simple factor, it's never been able to close back below the T line. These are the situations where you can identify getting in at 10 and holding on even if you're up here in the $50 to $60 range. So convergence analysis is what makes the identification of these big price moves. Convergence analysis is merely identifying multiple bullish confirmation indicators which provide a much higher probability that not only are you in the right place, but you're in a right place that has very strong bullish sentiment coming into it. So convergence analysis is adding everything up that you can see as positive trading based upon just a visual analysis. It's not like anything you have to calculate instantaneously. We can see a fry pan bottom was setting up. It was supporting right off the 50-day moving average. It was staying above the T line. And as they got close to the breakout area, they started gapping up. This stock going from 5 to 25 in that amount of time. We're not stock pickers. Most of the positions we get into, we might not even know what they do. All we're identifying is that somebody's buying them with great strength. This is just merely what we call, again, convergence analysis or 2 plus 2. But if you have a pattern that you can see setting up, it's confirming, and then they do a best friend signal, one of your strongest bullish signals, right at the breakout level. Another one where all you have to do is stay long as it stays above the T line. So a lot of people say, yes, you can show these type of things after they've happened. How do you identify them? Well, this is what the whole process is doing, is identifying pattern setups that are just starting. We've started recommending QS because of the fry pan bottom, starting up the uptrend off the T line with a best friend signal, a very strong bullish signal, followed a couple days later by a trend kicker signal, a very strong bullish signal, and now still trading above the 50-day moving average. This is good for both the short-term trader as well as somebody that wants to hold on to positions for the longer term. Longer term could mean 2 months, 4 months, 8 months, or a year. But you can see that your pattern setup is being confirmed by very strong buy signals coming out the other side. This would be one of the ones that we would be buying aggressively still if it comes back up through Friday's open and Monday's trading. And if we can use 2 plus 2 again on situations where we can identify everything that's adding to positive trading indications, Look at our left-right combo, one of your strongest reversal signals. Right smack dab off the 50 and the 34 and the T-line. Coming out of the oversold area. What would positive trading tell you? It's confirming this signal and telling you this resistance level is not acting as resistance anymore, providing a strong uptrend. Now we're looking at it again. If it opens positive on Monday, what do we got going on? Well, first of all, your doji rule. The price is usually going to move in the direction of how they open after a doji. 2, that would give you a doji sandwich, which means the magnitude of this candle and the magnitude of this candle will be the same, pretty much indicating they're breaking out going into wave 3. What creates this as a strong move? Well, if we can calculate that this has moved, I can't even see, 15 points, the next price move will probably take you up close to the $50 range. Again, this is not rocket science. Human emotions move prices in the same direction time after time. So again, this is just simply candlestick analysis of human emotions. So we are going to be putting on the training session. We had to postpone it from last weekend because of the power outage in Houston. But come join us March 6th. These are called mini series. They're very short. They're very inexpensive. But this is where you can analyze how to take convergence analysis or 2+2 analysis and add indicators together to give you much higher probabilities that you're going to be in a strong price move. That'll be it. We'll see you in the chat rooms.